Welcome to the Burgess Rawson podcast for auction 177. I have Matt Wright, Beau Coulter and JD Perlinger. Welcome.
Morning.
Morning. Thanks for having us.
So I am so excited today. We've got the results from 176 around the grounds we have to talk about. There was some incredible bidding, incredible stories to come out of what happened in 176. And we're bringing an incredible portfolio to finish out the financial year in portfolio 177. There's something for everyone. We've got properties from 700,000 to over 20 million. There's a range of yields, and like we saw in last auction where we had yields from 3.8% all the way up to almost 6%, again we're going to see a range of yields, a range of price points, and a range of offerings all around Australia. So last auction, Jamie, you had two incredible fuel sales. We had frenzied bidding.
Yes.
How and why? What happened to fuel all of a sudden that we dropped 200 basis points?
Oh, I think a lot of it comes back to the location and the tenant with this one. Metro Melbourne, we hadn't seen anything so close to the CBD for a while. Brand new site, and the story about OTR as well coming to the market and Viva buying them. It was really again we talk about long-term leases. This was a long-term lease to OTR, but it was triple net. So again, it was more or less buying a bond back to Viva for.
So walk me through triple net. What does that mean?
It means that the tenant pays all the outgoings, including single holding land tax. Then you've also
that was multiple holding at many funds,
yep.
Right? So Jane, what does triple net mean?
It means the tenant is fully responsible for all outgoings, and that includes multiple holding land tax for this particular property, which is...
I have not seen multiple holding come to market.
It's pretty special, especially when here in Victoria there's a lot of talk about land tax and the cost of land tax. So to have that in place, there was a lot of buyers looking at that and really focusing in on that side of things. And the other side of that is being triple net is that the tenant is fully responsible for building, structural maintenance, repairs, tanks, anything on the site. They fix.
So roof leak?
They're onto it. They do it. They
hole
fix
in the
it.
asphalt?
That's it. Fixed.
Perfect lease.
Pretty much. And it was quite interesting with this site. There was a lot of local interest. Moonee Ponds, Essendon sort of area. This site had only transacted once in probably about 30 or 40 years. The Morello family had hold of it and they ran a fuel site out of there for so long. So it had a story behind it as well. And the purchase was local, and he's wrapped with it. It's something for his grandkids, as he tells me.
And the day before in Sydney, you did it again.
Yeah, so the 7-Eleven in Roselands, again, it was a short lease, but there was a lot of fundamentals with that lease. The tenant owned, being 7-Eleven, owned the tanks and lines, which is really, really important. They're not going anywhere. They own them. They can replace them. It was a key site, Western Sydney. Again, so I think there's a lot of stories behind each one, but I think there's a lot more growth now within the convenience retail market. I think there's a lot more interest back into it. And that comes back to the fundamentals we always talk about. Tenant, multiple holding land tax, recoverable a lot of the times. Key locations, highway sites, high volume traffic. These are the sites they're looking for. They're future-proofed. They're always going to be there, whether it's convenience retail, fast food, showrooms, whatever it is. And that's what people are coming back to. And I think there's a lot more people coming back to the market at the moment as well, seeing that interest rates are coming back down again to jump back in before they go down too much. Yep. And we see yield compression.
Yep.
And Beau, I'm going to come to you. Obviously, there's a lot of negativity there can be around Victoria, but what I've been seeing is certainly that a lot of this stuff is selling for below replacement cost. What did you see in the Victorian auction last month that highlighted the activity of investors, despite some of this negativity in the media about land tax, etc.? Because we sold everything. I mean, the market was there and it wanted those Victorian assets. Why?
Yeah, I think, to your first point around a bit of interest in the market compared to maybe what we might be reading in the paper or hearing on the radio was the pure number of people in the room. I think we can all agree that not only did we have a full room from auction one, which is obviously standard, but I believe the room really held its own right up until the last auction. There was really, really good in-person bidding. Now, I mean, looking at the Victorian stock in particular, I think people are looking at it from, okay, well, there's clear skies in the horizon where from an interest rate point of view, we've already seen 2 rate cuts, potentially a third planned. I think people putting aside the land tax, there's still a lot of people with money that need to park it somewhere, and I think that whilst there's still, sorry, I'll go down a different path.
That's all right.
Yeah. So we're still a lot of mum and dads out there have still got a lot of cash, and I think for them being typically residential investors, and with the restrictions from landlords in residential what tenants can do and what you can't do as a landlord, I think people are sort of thinking, well, okay, what else can I do? Am I going to look to the stock market or going to look to commercial? I think commercial's great in the sense that you're getting long-term leases, opportunity for the tenants to pay your outgoings as well. Whilst in most cases land tax is not recoverable, I think that.
But I suppose with our residential investors that we've been talking to so much, they're used to paying land tax. In fact, they've been hit with greater land tax than ever in the residential space. So, in one way, they're used to that. But I saw with certainly a lot of the properties was lower than replacement cost.
Yeah.
You can't buy the land, hold the land, develop the property for what you're buying it for. So, do you think that that's together with lower interest rates as well, is that what's driving? Because the Victorian portfolio for June, the Victorian portfolio for last month, both of them incredible outcomes. What are you seeing for Victoria this month, Beau? What is your standout property that you're looking at?
From a Victorian point of view, I think we've got two large format LFR properties that we're bringing to market in Portland.
Where's Portland?
Portland is 4 hours west of Melbourne, between Warrnambool and I guess you'd say Mount Gambier in South Australia. It's on the coast, probably famously known for the Port of Portland, which is the largest port in Victoria outside the bay.
And who are the tenants there?
So the tenants are Pets Domain, which are obviously a fast-growing pet retailer with a national exposure, roughly 70 to 80 locations at the moment, and as I mentioned, and growing fast. And then Vinnie's, which we all know and love. I think the beauty of Vinnie's is probably the low overheads. I think that a lot of majority of the staff there are volunteers. There's probably one manager on site, which might have a paid role, but 99% of the staff are volunteers. So, I mean, for them, their overheads are low. I think that Vinnie's as well, they play an important role in the community with regard to, I guess probably helping the less fortunate. But, I mean, I'm not sure about you. If we have a fancy dress up night, that's probably the first place we go.
Well, Vinnie's, interestingly, although at first, of course, they are a charity, they have actually turned into massive retailers. They've got a huge network of stores and such a growth, and they've brought a level of commerciality to the way that they now treat leases. And so they're emerging, both them and the Salvos are emerging as a really, really great retail brand, signing good long-term leases. They're funded by the government as well. And so, the rents are paid, and it actually brings a lot of certainty. And they're new properties as well, so there's some depreciation, is there, Beau?
Yeah, so, brand new properties. So Pets Domain moved in December of 2024. And then the Vinnie's moved in only 2 months ago. So, brand new build, significant depreciation available. I think the other thing about them as well is, whilst you got the opportunity to buy one or buy both, on an individual basis, you're probably looking roughly around, say, 1.8 million. So sub $2 million price point, both of them. 1.8 million for the Pets Domain, and roughly about 1.3, 1.4 for the Vinnie, so really affordable.
And I think having a wide price range is really, really important for our investors. I know, Matt, you talk to me a lot about, we need to have things in the sub-million range. We also need to have stuff at the $20 million range. You're bringing some properties in Tasmania. You're the Tasmanian expert of Australia.
We love Tasmania, don't we? We love it.
So, Matt, obviously there's a huge difference, but, I mean, we know that pet ownership in Australia is one of the strongest in the world. We know that there's these incredible brands. What are the differences, the key differences between a Pets Domain and a Pet Barn? Are the leases different? Are the yields different? How does an investor look at these assets?
Yeah, I think we touched on this in the last large format podcast, but we've got the Pet Barn and Pet Stock are your larger guys. Pet Stock's obviously owned by Woolworths, and then you've got Pet Barn, which is this asset. It's Green Cross, which is a subsidiary of NASDAQ listed Ontario Pension Fund. They've got about 170 stores across Australia, continually growing, and they also do vets as well. This one's not a vet clinic as such, so it's just the retail component. But
How
they
big
do
is
do
it?
grants. It's about 600 square metres.
And is that is that the ultimate size for them, or do they go bigger or
They
smaller?
do. We've seen them go big and small depending on the location and the demographic and what they actually require. I think interestingly in this location it's Devonport, so it's their number one location that's been there forever and a day. So all the passing by traffic, it's on the homebound side, so people will stop there. They've actually got another store in Devonport, which tells me that the demand is significant for that sort of area. So they would have done a lot of research to do the second store, but they've just renewed the lease here, so pretty excited about that one. And then we've got Vinnie's on the same title. So obviously, as you said before, they've been around since 1883, low overheads, not for profit. They've got 25 stores in Tasmania. So we're offering it as one, so it's on one title. So it's an important homebound site.
And
too.
just for reference, well, you mentioned we're talking about sort of the building size. I think you mentioned 600. It's actually 600 square metres as well for the Pets Domain in Portland as well. So
So it's the optimum sizing for this
yeah,
style of retailer.
That's right.
Yeah.
Yeah.
So Matt, for those who are listening who know nothing about investing in Tasmania,
Yeah.
tell me, where are my key areas? What am I looking at when I go to Tasmania? Give me the spiel on Tassie.
On Tassie. Well, it's obviously, it's in the news now. So let's hope that stadium gets up and we'll get to that. But you've got basically, I'd like to do it as three capital cities of Tassie. You've got Hobart, which is the administrative capital. Majority of the people live there. But what people probably don't realise is 50% of the population live in the north, and that encompasses Launceston and also Devonport. So talking about Devonport, strategically critical to Tassie because you've got the Spirit of Tasmania for passengers and tourism to come into. But because it's an island, all the freight from the mainland comes to Devonport. So there's a lot that has to channel through there. So that supports Devonport as a key critical area. This property sits right where the Spirit of Tasmania. So if you want a little outlook with your investment, you can look out and see the new boats when they arrive. And then we sort of swing into Launceston, which is the second biggest, but critical. It's in the middle of Tassie. So we're offering an asset which we're really excited about. We spoke about 600. This is 1,600 square metres, so quite substantial. And it's a TKD, which is a toolkit depot, owned by Bunnings. So Bunnings purchased Adelaide Tools going back a few years ago. And you might say, well, why would they do that? But this is targeted at a different person. I'll put my hand up, I'm not really that crafty at home. So I'm more of a Bunnings man with a Ryobi drill, where this toolkit depot is your Milwaukee, it's your tradie stuff, and it sits directly outside of Bunnings.
So your underpin tenant, though, is Bunnings, which is Wesfarmers,
Correct.
one of the fastest growing and darlings of the Australian Stock Exchange. Top 10. Income up for the year on year growth.
Yeah, incredible story.
Best tenant in Australia,
Best lease
arguably
covenant.
best tenant in Australia. Of course, maybe behind OTR based on the outcome of last month's auction. Okay, so Jamie, you have the McDonald's, the first McDonald's in Victoria to come to market in the last 5 years, but it's not the only McDonald's in our auction. And I was so excited to see that we actually have two of these offerings. Talk to me about the two McDonald's that we're bringing to market, what they look like, what their price range is.
Yep. So first up, I think being Melbourne, we'll go straight to St Albans. I mean, it's your
favourite.
It is my favourite. It's one of those. It's one of those things
Little
that
baby.
you get. Pretty much, like there's always those dreams of selling those properties, and the last one we sold was in 2015 in Geelong for the Geelong Council, and there hasn't been another one since freestanding like this. So yeah, we're pretty excited about it. Brand new 20-year lease, ground lease in place. 175k rent. It's you could say it's like
Bond-like.
Yeah, you could say it's like bond-like, but it's in that price range for a lot of investors to be able to get into.
And what is the
for
price
this.
range?
Oh, look, you're going to be looking at, I don't really want to say right here, right now,
Okay, right, take that back.
to be honest. But then you look at what Yosh has got listed up in Sydney. Yosh took us to this site a month or so ago and blew me away. Like seriously, western suburbs of Sydney, not far from Parramatta. It's about 25k's drive from the CBD and just off the motorway. This asset, you've got 7-Eleven and you've got McDonald's. Two freestanding, so it's not they're not joined. Two freestanding assets on the one title, and on one of the major roads in Sydney. It is by far one of the coolest things you'll ever see. To be able to pick something like this up in Western Sydney, it's just you'll never see it again. You don't see these types of assets. They're usually attached to something else or the McDonald's attached to the 7-Eleven. These are two freestanding sites. So for us, I think, and Yosh, he's pretty excited about this and see where it could go. Pricing, we don't know. Like, it is so rare. Like, you sort of see the Roselands of 7-Eleven. It is the growth of Sydney and the growth Darling. You know, you've got the new airport going out that way as well. It's just, I don't know. We just can't put a price on it at the moment.
And Parramatta is the geographical centre of Sydney as well, and Western Sydney as a whole. I mean, the growth, what the council's building out there, they've done new libraries, new pools, new childcare. There's so much investment going into Western Sydney. It is a true story of Australia at the moment. So coming back to last auction and this auction, obviously we sell more childcare than any other agency in Australia. We have 5 incredible opportunities this auction. What sort of price range are they, Beau, and where are they based?
Yeah, so thanks, Ingrid. So as you mentioned here, we've got five childcare investment opportunities coming up. In this campaign, they range from 1.5 to 7 million in value, and we're seeing them being offered in New South Wales, Victoria, and Queensland.
That's the great thing about childcare, is that the assets are available everywhere and there's something for everybody. The other thing is obviously usually very, very long leases and great operators. And we've seen increased government funding into that space, which is it seems to be never-ending funding into that space.
Yeah, that's right. I think the bipartisan support from both sides of politics is critical for anyone that owns or is considering investing in childcare. I think there's some comfort in knowing that, I guess, whatever happens politically, there's going to be support there. Well, there certainly has been historically, and with the most recent election as well. And I think the quality of builds as well, and they're typically on significant land holdings, good at grade car parking, the quality of build and amenity is significant. I've got children in childcare, and I know from...
I think half our office is supporting the childcare industry at the moment.
Yeah.
And that's what they talk to. I mean, obviously it's driving productivity, it drives tax inflows to the government. So I think the childcare options are huge. Jamie, talk to me about the fuel coming to auction this time around. What have we got? What are our price points? I think we've got some better yields for people who are looking for a softer yield, because obviously we come in these podcasts and we talk about 4 and 5% yields and people go, how does that sit? You've got some other end of the market. Talk to me about those.
Yeah, look, we've got something for everyone, really, to be honest. Like, you look at something in sort of Metro Melbourne in Diamond Creek, and then you look at some of the stock that we've got up in New South Wales, in Newcastle. There's a great site there. Some of these sites are a little bit older, but it's the key. We go back to key fundamentals: location, land holding. This thing sits out the front of a shopping centre. Charleston Shopping Centre sits right at the front. You actually have to go past it to go into this thing. And the shopping centre sees about 4.5 million people per annum going through the door. So you're at the front of those. So and the key fundamentals of that. And then you look further up into Queensland. We've got 3 ripper sites up there. You look at the Gap, 7 k's from the CBD. So literally at the doorstep of the CBD. And again, key locations opposite a shopping centre. It's got a Macca's, Coles sitting directly across the road. Again, fundamentals of any commercial convenience retail: location at the front of a shopping centre. Like, it's inevitable. It's going to be there for everyone today. And then you look at Annerley. Again, this one's a Shell Viva site. Rent's paid yearly in advance. It is
yearly in advance.
Yearly in advance. So you get your full rent up front, including GST, everything every year. I think in February, March, you get a big check, and that's next to the Gabba,
Plus outgoings.
Yes, plus outgoings, everything, and it's right near the Gabba. So it's on the homebound side as you're coming out of the CBD. Look, that one is going to be a bit of a higher yield. There's a bit of a longer term play there. The rent's on the higher side, but the return on investment now, it's got another 5 or 6 years left to run on the lease. There's an opportunity to increase that rent as well at some stage with a vacant shop. So there's a lot of good plays on that one.
And with the Olympics and the booming of Queensland, all of Queensland is absolutely booming. We've got, huge migration, house prices going up. You've got the Olympics. So Queensland is the place to be at the moment.
Yeah, I've got one more.
Tell me.
Berrinbar. So
I love Berrinbar.
So we all love Berrinbar. We've done a lot. We've sold a lot in Berrinbar. We've got some stock in Berrinbar right now for a couple of very well-known developers up in Queensland, which is quite amazing. But this site is directly in an industrial site. It's a truck stop. It's unmanned, leased to Ampol. and this is 24 hours. You've got toll across the road. You've got some of the biggest distributors in the country at your front door. So this thing trades 24 hours a day. It's a significant site for future development if need be. But, these things, Ampol love it. They've just renewed their lease. It's going to be there forever and a day because of the trucks.
Is the yield different on an unmanned truck stop compared to a...
Oh, definitely.
Full man, right?
Yeah, definitely. I mean, we're talking 7.5% for something like this. It's
So good value.
Yeah. You probably couldn't buy the land and build it.
Yeah.
Again, and when you look at, say, Annalee, you couldn't buy the land and build it for the amount of money that we're after.
I think the beauty of, in a general sense, when we're having a chat about, I guess, properties that we're offering, our average last campaign was, say, 5.6% across the board national. I think the beauty of... talk about sort of the high yielding assets or not sort of the traditional results we'd see. I mean, last campaign nationally, we had an average yield of 5.6%. I think with the high yielding ones we've seen over the past, there's an opportunity for buyers to, really jump in and get them at a certain yield and see that compression over time. I mean, we've seen some phenomenal stories, which I know we've written about in our portfolio magazine, of the growth and the opportunities where people have not necessarily taken a risk, but maybe being prepared to look where others weren't. And sort of, as Jamie mentioned before, the really key, credentials of any property, the fundamentals of the location, certainly the size of the land and the future prospects for the development. So I think there's certainly great opportunity out there. And Jamie, as we mentioned, we've got some great opportunities. But I think historically we've seen people do really well by, taking a risk, if you'd like. We'll probably continue to see that into the future.
Just swing back just quickly. One place we haven't spoken about quickly is, and we've got a property over there, another convenience retail site. So sorry, it's South Australia. No stamp duty payable. So
we
there's an
love
opportunity.
South Australia.
South Australia is still, it's still
booming residential house prices as well.
Great premier stability from the government, spending money on events. I think it's just no stamp duty.
It's a great story. We've sold a lot of stock over there over the last sort of couple of years, and really, it's got the key fundamentals. A great CBD being Adelaide. It's growing, but also for investors across the country looking to get into a site as well. There's an opportunity there to save on stamp duty.
And that's a big part because obviously on costs have to be considered when someone's trying to put together a deposit for a commercial property, especially when we see our residential investors converting over to commercial. It is a higher deposit, and when you add on to that stamp duty, etc. So South Australia presents opportunities for investors to save on some of those on costs. I think also, and the message that I really see across all the Burgess Rawson auctions is we stick to a certain style of property: fast food, medical, childcare, large format, really high quality tenants.
Convenience retail.
Convenience retail. But we're bringing a range of prices and a range of yields, and also, diversity of location, which is really, really important. So if people are trying to manage things like their multiple holding land tax, I speak to a lot of investors about this strategy to spread out across geographically, have something in South Australia, something in Queensland, something in New South Wales, which allows them to not suffer the multiple holding land tax and still get a lot of those benefits. So, every podcast we play this game, and Matt, I'm going to go with you first.
Oh, off the first up, righto.
I'm going to give you $3 million to spend.
Is that it?
You're only getting $3 million.
What are they getting?
I don't know yet.
I like going last because then I can take all your money and do it. So,
I'm giving you $3 million.
Cash.
What are you buying next? Cash.
Right.
What are you buying next auction?
Great question. If I'm going to the bank and leveraging a bit more, and I'm getting it up there a little bit more, I'd love to have a look at the TKD, being the Tassie guy, in front of Bunnings as we've gone on about. But I just think it's incredible. Best thing for me is
So TKD Toolkit Depot.
owned by Bunnings. That's what I want to buy. Right in front of a large format centre, on-site car parking, 28 on-site car parks, important. If you ever had to repurpose it 20 years down the track, you can split it into two. I love it. That's
How
what
many
I'll be
square
buying.
metres is it to do that with?
1,600 square metres of lettable area. So we spoke about 600 before. 2 800 square metre boxes would just be unbelievable. And if I'm not going to the bank, I'm probably looking at something like the Pet Barn and Finny's because we like that. And it's in Devonport too.
Yeah, so you're Tassie all the way.
I got to pump it up. It's a great spot.
So I'm giving you $2 million. What are you buying out of the next month's list?
Yeah, $2 million. I think. If I, Matt sort of discussed before, if I go to the bank and leverage a little bit more, that'd be great. I think the one that's sort of caught my eye is the medical investment radiology clinic. We've got imaging clinic. Sorry, we've got for sale in Traralgon.
Now, where is Traralgon?
Traralgon is 2.5 hours east of Melbourne, along the Princess Highway. Traralgon is considered sort of a twin city to Morwell. People who live in Morwell as well. Traralgon is, in my view, probably the premier catchment and premier catchment within the entire of Gippsland.
Wow.
In my view.
And you are a Gippsland boy, so
I am a Gippsland boy. I'm from Leongatha. I think that Traralgon we're seeing not only from the growth in residential, but also the pure number of national retailers that if you're going on the other side of Traralgon heading towards Sale and through to Bairnsdale, the infrastructure is significant from a retail point of view.
And I love also, a lot of our people at Burgess Rawson come from all these areas, and so you're an absolute expert on the area, which is great for people who maybe are looking at it for the first time. Who is the tenant? Because I know this probably has a bit of a story. I love how it's underpinned, but talk me through who the tenant is and who the subtenant is. Why are you loving this property so much?
Yeah, so the tenant is Medical First Group. So there's a medical clinic directly beside this property, which they lease and occupy. They had previously owned both sites. The reason so in this instance, whilst the lease is in place to Medical First Group, there is a sublease in place to IMED Radiology, who we all know, national imaging giant, I guess you could say. Very, very common, well known.
So walk me through the property. Is it a full radiology service? What kind of, have we got a sticky fit out? What are we seeing when we walk through this property?
Yeah, so I think, the fit outs, it's of high quality. The lead lining in the walls, so the cost to be able to build this is quite significant. The other thing is sort of the imaging machines, the CT scans, MRI. They're all expensive and costly to move. So I think we find that, and we've sold many of these over the years, that they rarely do move location because of just the pure cost involved.
And barriers to entry. It's not like also there's going to be another radiology open up down the road. There's barriers to entry, but also sticky fit out.
Yeah.
So those two things tend to drive this. Now, the doctors who are actually the head lessee, they've got multiple sites?
Yeah, they've got 16 locations.
Wow.
So 16 locations across Victoria and New South Wales. Yep.
Fantastic.
Yeah.
Okay, and how many square metres is the site? How big are we talking?
So the site, 730 square metres. It's directly opposite Woolworths.
Oh,
Literally directly opposite. So you couldn't ask for a better position. So the exposure is phenomenal.
And supported by the doctors next door as well, referring into and utilising the services.
Yeah, it's on the car park side too. So the Woolworths car park is in between. So the actual Woolworths retail store, car park, then this property. So, the exposure is phenomenal. I think that, and then the clinic itself's roughly 290 square metres as well. And there's on-site car parking. So not only can you, rely on the street parking, the parking across the road at Woolworths, but you've also got on-title car parking as well.
I'm sure Woolworths would love to hear that you want people to park in their car park when they go across the radiology. Jamie, I'm going to give you $5 million.
Oh, why does he get the most?
Well, because he's the fuel man.
Okay, well, I like the amount of money. It's great. It'd be great to have. But I'm going to start lower. So I'm not going to. I'm going to spread.
For our listeners, they don't know how much they're going to get. So they've got to actually know the whole list and know exactly what they're going to do with their money.
Yeah. So we're really lucky. And like all the time, some of the cornerstone and something that really holds our portfolio options really, really well is some of the entry level investments that we have, and then that's thanks to developers like Oriana. Bricks Property and Pace this time around as well. These entry level things are underneath apartments. We talk about residential buyers getting out of residential, coming to commercial. This is perfect. They understand apartments. This is apartments on steroids. Really, you're getting 5-10 year lease terms. Your entry level, anything from $600,000 to $2 million. You look at the stuff that the Bricks Property Group have done down at Cheltenham. It's right out in front of a Dan Murphy's. like, how can you go wrong? Go to Strong Pilates, go across and get your vodka for the trip home.
So what are you buying?
Perfect. So I'm more than happy.
Pilates and vodka sounds amazing.
I'm more than happy to buy these assets. I especially like a Strong Pilates right at the front of Dan Murphy's. You know,
Yep.
ground level. It's 2 showrooms. You could always split them up. You know, everyone's after health and fitness. It's down Bayside. Perfect. If I'm not buying that, I'm buying Macca's. Thank you.
Yeah.
Well, you know what? I'm buying Eljana because I see them as an emerging tenant coming in through Victoria. I think they're the next GYG.
Yeah.
I absolutely love the depreciation, the cost to build, barriers to entry, but also I think that what they're bringing to the market in the way of food, they are the next GYG, and I think that they're going to move, you know, down the yield curve of the fast food rankings, and there's an opportunity there to get them where they're still, you know, probably a little bit higher, but my personal opinion is there's going to be yield compression on that style of operator. So I'm going the Eljana. I'll be a neighbour.
Yeah, cool.
You can have
Happy
the
to.
Macca's. I'm having the Eljana. And
I
if we
better go
all,
to Starbucks then. You can have the 7-Eleven.
and if we pulled our money, Greystanes. I mean,
Yeah, definitely. Like
definitely.
That thing is insane. It's like it's such a trophy asset to have
Yeah.
in Western Sydney. It's so cool. Like I've been there, I've seen it. You know, you feel it. You can feel the energy coming out of this site.
And it would be remiss of me to not talk about our select portfolio from last auction. I know that Warners Bay has transacted, and Jamie, you also transacted yours. Tell me about it.
Clarkson, great site. Like, I mean, it was in between 2 shopping centres, brand new 7-Eleven and Starbucks on one site, a huge site, 4,500 square metre site, potentially split it up down the track. You know, we had 7 offers come through first round, 2 from WA, 5 from Eastern Seaboard.
Wow.
Squeezed them down to the final round, and an Eastern Seaboard buyer bought it. You know, it's you see the transition from people happy to buy elsewhere.
But I think that's a sign of the market because we didn't have that depth going back a little while ago.
No.
The Eastern Seaboard wanted to go to WA. I think the confidence to actually do that. I think that's a great sign.
Huge.
Yeah.
And it's not, you know, we're not talking $1 or $2 million.
Yeah.
It's quite a large investment for our guys.
And the exciting thing is Select is back in August.
Yep.
So Select, for those who are listening, is our EOI campaign. It goes for a little bit longer than August portfolio, so it gives you a bit more time to do your due diligence and to do a deeper look into the properties. It's generally a higher price point, and it sits between 15 and 45 million, and it's back in August. So we're lining up some incredible assets to bring to the market in August. But
I'm excited for that one.
before then, we've got end of financial year to get through, and if you're looking for an asset to purchase before the close of the financial year, we have an incredible portfolio. We encourage you to subscribe to Portfolio Magazine. Go on our website at burgessrawson.com.au or talk to any of our people. They're experts in both location and properties, and we're here to help. So thank you so much for coming in today, guys. I've really enjoyed this.
Thank you. It's been fun.
Appreciate it.
Thank you.
Cool.
See you
Thanks.
soon.
Cheers.
Cheers. Bye.